So when you think of the word value investing, what comes to mind? Words like Warren Buffett, old-fashioned, outdated, long-term. So many different words associated with it. So which is which? So with our 20 years of combined investing experience, let us share with you how we understand it and how you should understand it.
Hi there, we're the FIRL Guys and welcome back to our channel, the best place for long-term stock investors. I'm John.
I'm Jay here.
And in this video, you're going to learn about what is value investing and what is not, whether it's a suitable style for you, and whether you can actually adopt value investing in your lifestyle.
Now, as usual, before we begin, if you enjoyed this video, remember to give it a like and of course, subscribe, click on the bell so that you know when our new videos are out.
So, what is value investing? I'll give you an analogy. In Malaysia, where I live, most people like to buy properties as an investment asset class. And what are the criteria that they look for when they buy a property? Nice amenities, it's conveniently located, there's schools, there's banks and all this. So one area that actually fits this is an area in KL called Bangsar. And if you drive around Bangsar or you go online and browse, right, you realize that most of the properties are priced in the $1 million range, probably 1.1.
For a normal house.
For a normal house, right? And these houses are like, what, 30, 40 years old? So there's substantial renovation costs that you need to put in before it's actually really livable. And when you do that, and then you realize, oh my gosh, am I ever going to afford something like this? And then one day you drive around Bangsar, and then suddenly you see a house for sale, it's like 200K.
Ooh.
What are we going to do?
Haunted.
Haunted, yeah, that's probably one. Or the other thing is, probably there's like such a big leakage of pipes, plumbing works that require a lot. Yeah, but for 200K, MJ, do you think you're gonna buy it?
No way, man.
No way?
No way.
Why?
Because it's not realistic.
It's gonna be unrealistic. So for 200K, most likely property investors or anyone will tell you, oh, just go and buy it, because it's probably developer's price at 200K. Now, even for haunted, there's ways to solve it. You can probably get a medium to, invite or court the ghosts away. Yeah. But yeah, that is actually, in essence, value investing. Because you want to find something that is, the value is much more than what the price is actually offering right now. And you are trying to find this thing called the price and value divergence. That's the essence of value investing.
Now, to understand value investing a little bit better, you need to know the difference or distinction between an investor or a speculator. And here are 4 ways to start with to know whether or not you are a speculator. Now, the first way to tell whether or not you're a speculator is if you always react to news. You see news as legitimate information. Now, it's not that it's not legitimate, but that it is useful information to you as an investor. You probably heard of the quote before, buy on rumors, sell on news. So that's the first one. Now, the second way to tell if you're a speculator is if you are someone who likes to always ask for and look for stock tips from friends and family members. Why? Because let's be honest, finding investments is not exactly easy. It's not zero work, and who doesn't like a shortcut, right? Number 3, you are always looking at your screen and wondering, okay, where's the price going? Is it going up or is it going down? And somehow you think that the price can give you some sort of information or insight as to whether the stock can go up or down, instead of looking at it as a business.
Yeah.
That's number 3.
There's actually a business behind the stock.
And number 4, you're a speculator if you treat stocks as numbers on a screen. Or as a close friend of ours like to say, green bar and red bar, up, down. Now, in big contrast to a speculator, an investor is totally the opposite.
Yep.
He looks at a stock as if it was a business, because guess what? It is a business. Instead of just a bunch of papers to trade or a number on the screen. Now, another word for the word stock is called shares. And what are you sharing? What is being shared? In this case, A share essentially is just a slice of an entire business. So an investor will look at buying a stock or a share as if it was buying a part of an entire business. Now what this means is that in contrast to a speculator, an investor is very interested in the business, and you can say he has what we call a business owner's mindset. Now, as a business owner, what are the kinds of questions that you're going to ask? Are you going to ask what is the stock price going to be tomorrow or the next 2 weeks? That's not going to be your question. What you're going to ask is, hey, things like, is the company profitable? Who is the CEO? What is his experience in the company? What is the industry's overall growth? Those are the kind of questions you ask.
And the funniest part is, MJ, is every time we meet a lot of people we coach and we teach, most of the time they'll ask, hey, what do you think the price is going to be? And then the first question we ask back is, have you read the annual report? And likely they haven't even read the annual report.
And fun fact for you, most people in this world, not just in Malaysia or, or Singapore or wherever, most people are speculators.
Yes.
Like 90+%, guaranteed.
Yeah, so don't feel left out because it's the herd.
And so once you have a business owner mindset, you're not going to ask things like, as I mentioned earlier, when the stock is going to be in the next 2 weeks or what next quarter's profit is going to be. That's not what a business owner will ask. And of course, you definitely won't be asking, hey, what is the newspaper writing about the stock? That's totally irrelevant.
Yeah.
And so, if an investor won't use things like news and rumors to make their decision, what do they base their decisions on? They base it on sound facts and financial data, things that are more proven or provable. Things that you can find, for example, in the annual report or the financial statements.
Yeah, and these numbers are actually audited, right, by an independent party.
Yeah, and most of the time, they're accurate.
Yeah.
Another word for this is what we call fundamental analysis. In other words, you're not looking at the price, you're looking at the business, the industry. Is it viable? Is it growing? Is it not growing? Things like that.
Yeah.
Now, to me, the last big difference between an investor and a speculator is what we call their time horizon. Is it long or is it short? And in an investor's case, it's usually long. So to give you an example, right? If a speculator were to buy, let's say, a restaurant, he'll buy it, and then after 2 weeks, he'll think, hey, do you think I can sell it for like 10% extra? That's what he'll try to do. But of course, again, as I mentioned earlier on, it's about business owners' mindset, right? So if you buy a business, a restaurant, you don't think of selling it within the next 2 weeks. But if you're a speculator, you do. And I've heard this once before from Howard Marks, which is a very good investor. What's the big difference between a speculator's trader and an investor? And that's this. The speculator will buy a stock at $1, sell it at $1.50. Then he'll buy the same stock at $7, sell it at $7.70. And then when the stock is at $12, he'll buy it at 12 and then sell it at 13. What will the investor do? The investor will buy it at 1 and sell it at 13. So the hope of a value investor is to actually buy a company that it can ideally hold forever. It doesn't have to sell. And even better, if that company is undervalued. And hey, I want to know whether you are, based on our definition, a speculator or not. But whether or not you're a speculator or an investor, one thing you can definitely do, and one thing a speculator and an investor have in common, is that they can give this video a like.
So the next point is to address what value investing is not. PE ratio, book value, net tangible asset. Is value investing really just revolving around these ratios? Now, don't worry if you've never heard of these ratios or terms before. We'll be producing more videos to explain this to you. But literally, the point I'm trying to bring is that value investing is not just revolving around these ratios.
And the key thing is that it's not about numbers.
That's right.
It's also about the story and the qualitative aspects as well.
Correct. Now, the next common myth that I hear from a lot of people about value investing is really about buying low and selling high. The problem is the reference point is actually the price and not the value of the business. Buying low and selling high should be referenced to the value instead of the price.
Yes, and if you remember what I told you about earlier in the video about the difference between price and the business, very important.
Now, to illustrate my point, if a price of a stock dropped by 50%, it doesn't necessarily mean it's undervalued. And similarly, if a price of a stock has went up by 100%, doesn't necessarily mean it's overvalued. If you look at it from this angle, if the profit of the company increased by 100%, but then the stock price only went up by 50%, would you look at it in a different light now? So the next thing that I also always get is this thing of buy and hold forever. Like what MJ earlier said. If you want to buy and hold forever, yes, provided the business adapts and change with changing environment. Case in point, 20 years ago, I'm pretty sure a lot of people had Nokia phones. Where are they today? They were literally kings and they were minting profits back then, but literally, what changed? The iPhone. MJ, you've got an iPhone, right?
Yeah, and back then I still remember everyone had a Nokia.
That's right.
But not everyone actually, but a lot of people have iPhones and a lot of other phones as well.
A lot of other phones. And that's why you can only buy and hold forever if the company executes and continuously adapts forever.
And the key thing is that the holding period of it being forever is ideal.
Yeah.
It doesn't work all the time. In fact, it doesn't work most of the time.
Yeah.
But keyword, ideal holding period forever when the business is good.
So the next common thing I hear about is that value investing is only for old people and it's not suitable for the younger, the millennials. The other common popular belief about value investing is that it only invests in blue chip stocks. Now, if you really dig and try to understand what does blue chip actually mean, it's very different from what the popular myth is going around. The other thing is about value investing doesn't invest in tech companies, and that value investors always prefer something brick and mortar, something tangible. Actually, it's not. If you look at Warren Buffett's portfolio, his biggest holdings are actually Apple. And he has invested in this tech company called VeriSign as well. So, it's not true that value investing is only for old school kind of investing.
It's for everyone.
Yeah. The next myth that I want to bust about value investing is about the difference between dividend and growth investing, and then they say there's a difference. Actually, to tell the truth, I think it doesn't do justice for us to explain it in this video. We're going to produce another video to show you there's actually no distinction between dividend, growth, or value investing. It's actually all joined at the hip. Right, MJ?
Absolutely.
So rather than having you wait for the next video, I'll just briefly explain it here. Value investing and growth investing, most people in the market actually say there's a distinction because for value, you always buy a price and value divergence. You try to look for ratios that, that make the company look cheap in terms of valuations.
Low PE.
Low PE, low price to book. But actually, what a lot of people miss is that growth, value, or dividend kind of investing, you need to focus on the business model. If you understand the business model well, when it is at a growing phase, they can't pay you that kind of dividends because they need to have that kind of money to actually grow the business. But does that say that it's not value investing and that's growth investing? I highly believe that it's not lah. And we'll explain this in another video.
And are these people trying to say that growth is not part of value? Now the question is value investing for you? Does it suit you, your lifestyle, your personality and all that? The truth is, value investing is not for everyone, and here are some of the reasons you should take note of before you decide to become one. Number one, value investing suits you if you are a patient person or you are someone who intends to become patient, to learn how to be patient. Why? Because the truth is, a stock is a business, right? For a business to grow in value will take time. It's not going to happen in 2 weeks or 3 months. Any good business will still require you to, let's say if you invest in this business, will still require you to, wait for 1 year, 2 years before you see any rewards. But if you're someone who is a speculator and you want to see rewards in 2 weeks or a month, then definitely stay away from value investing.
Can you imagine trying to make your KFC franchise profitable within the first month?
You gotta put something very special in that chicken. Next, value investing suits you if you're someone who really like to do research or someone who plans to learn how to do research properly. Which, by the way, if you're really interested in that, you can click the link in the description where we can guide you through our one-on-one coaching program. You can apply it.
Yeah.
Now, The reason it's important that you have a research mind, right? That you like to research is because at the end of the day, as John mentioned earlier on about the Nokia example, you need to be able to be curious about how industry trends are changing.
Yeah.
You need to know where is it going, right? If you're someone like that, then you will have foreseen the downfall of Nokia, for example. And so that's really very important. And because with value investing, you're gonna not just invest for a few weeks or even a year, you're gonna invest for decades. So you better be interested in how the world, the economy, the business, the industry is changing for better or worse. Which is why in the next point to see whether it suits you or not is if you are someone who wants to create wealth over the long term. And the key thing is consistently. Not just 1 year, not just 2 years, but forever until you hit the grave.
Yeah, it's a marathon, guys, not a sprint.
Yeah. And value investing is definitely not for you if you are someone who doesn't like to read. Because again, you need to spend time to research. And reading to investing is like sweating to exercise. You have to do it. You can't escape it. The second reason you should avoid value investing is if you like short-term profits. For example, 5 million ringgit in 2 months. Unless, of course, if you already have 4.9 million ringgit, then maybe it might happen.
Yeah, a lot of people tell you 100 ringgit to 1,000 ringgit within 2 weeks.
Yeah. Sorry guys, not happening.
Yeah.
Number 3, you like the thrill, the emotional thrill of gambling and speculating. Patience, what the heck's that? And of course, if you need to be honest with yourself, right? If you are someone who lack emotional control, you just love gambling, when you go up to Genting or whatever, you just love it, then value investing, definitely. It'll be a very bitter pill for you, value investing, that's for sure.
It's damn tough to swallow, man.
And ironically, value investing will not suit you if you are someone who likes to take zero risk, completely opposite from the gambler, right? Because when it comes to value investing, it's not about avoiding risk. It's about having a low risk, not zero risk, low risk, high return strategy. And that's why you need to learn how to identify the risk, lower it, take the right amount of risk, and that's where you'll get your reward.
There's so much more we can share about what value investing is and what it's not, and we can go on and on. But by you watching this video, you will be way ahead of the crowd, trust me. Remember to give this video a like. Come check out our other videos. That like button, just smash it for me, please.
Yes.
Yeah, and see you in the next video.
Check us out on IG and Facebook as well.